Hi Forex traders, you're welcome back. Today I'm going to be rounding up the 5 most important institutional reference points in their order of importance. Remember previous videos I talked about the 5 institutional reference points, listing out the mitigation block, the breaker, the liquidity void, the fair value gaps, and today we're going to be talking about the order blocks. Order blocks are very powerful. Most smart money traders are confused about how to use order blocks the right way, and maybe if you just stay till the end of the video, you're going to get clarity on what order blocks are and how to use order blocks. All right, so order blocks are institutional reference points that institutions would usually reposition their orders for future purposes. That's what order blocks simply means. It's an area in price action that has a lot of institutional orders that is, the institutions will revisit to pick up either their buy orders at a bullish order block or their sell orders at a bearish order block. Okay, so basically there are 2 types of order blocks. We have the bullish order block and the bearish order block. So what is a bullish order block? So a bullish order block is the last sell candle in price action that was traded through by a buy candle, thereby engulfing the sell candle. That is a bullish order block. A bullish order block can also mean consecutive sell candles. That means more than one sell candle. For example, if you have a sell candle here, you have another sell candle that is traded through by one or more consecutive buy candles. You see that this is also a bullish order block. So we outline both the 2 candles as the bullish order block. Again, another scenario for identifying the order block is to identify the candle with the largest body. So if we have sell candle here and we have another large sell candle here, you see that was traded through by a large buy candle or consecutive buy candles, the order block is actually the large sell candle there that is being traded through. So institutions will revisit this area, pick up their buy orders and expand higher. That's what a bullish order block simply represents. A bearish order block is the opposite, the last buy candle that was traded through by a sell candle, thereby engulfing the buy candle. That is what a bearish order block simply means. A bearish order block is also one or more buy candle, you see that is traded through by a sell candle. So you match the 2 candles as your bearish order block. Institutions will revisit that area and sell. Again, a bearish order block can mean an area where you have candles, multiple candles, then you have a large candle. You see that all these are buy candles. This is a buy candle, this is another buy candle. Then you have a sell candle that engulfs all those candles. The order block is actually the candle with the largest body. That is also a bearish order block. All these are technicalities of trading an order block. Again, you must understand that the most valid order block is the order block that has a fair value gap attached to it. The most valid order block is the order block that has a fair value gap attached to it. It's the most valid order block. Again, the higher the time frame you are identifying this order block, the higher the probability of the order block sustaining price action in the direction of the order flow. Order blocks are only as powerful when they are in the direction of the order flow. Order blocks are only as powerful when traded in the direction of the order flow. That means you should not be buying just every other order block, just every other bullish order block, except that you're buying a bullish order block that is in a bullish order flow, that is in a bullish market structure. You shouldn't be selling at every bearish order block except you are selling in a bearish order flow or a bearish market structure. Just then you can sell a bearish order block. In an order flow, for example, in a bullish order flow, bullish order blocks will provide support for price action to trade higher. In a bearish order flow, bearish order blocks will provide resistance for price action to trade lower. I think I've explained quite a bit about order blocks. If you're still confused about the order block, then I think you may need very close attention. something like that. But with the little that I've just explained to you about order block, let's get to the chart. Let's see if we can identify just a few of them in price action and see if we can do something with it. This is the Euro USD chart, and this is the monthly time frame, and we're going to be identifying just a few of these bullish and bearish order blocks and see how they support price action to trade higher or resist price to trade lower. So previously, you can see here price action has been bullish. We see price action creating higher highs, higher lows, higher highs. So we know that we're bullish already. So price action created that expansion higher that takes out the external range high right there, and we see price action traded back into the bullish order block. What is the bullish order block in all of this price delivery? It is the sell candle right there that was traded through by consecutive buy candles. Okay, take a look at that. We measure from the high to the low of that sell candle. Look at how price action traded above the sell candle consecutively, and we traded back into that bullish order block. The criteria is we look for entry at the high of the order block there and stop loss below the order block. Price action traded into the next external range high. Okay, right here we see again price action created another bullish order block. You see the two sell candles here that were traded through by consecutive candle. You see that these two candles that were traded through by this large candle, that is also a bullish order block. Price action traded back into the bullish order block here and created another expansion higher, created an expansion higher. Okay, again price action created another order block. Let me show you on the sell side. So all this is a bullish order block. This is a bullish order block. Sell candle that was traded through. Again, sell candle, two sell candles that were traded through. Just the examples that I showed you guys. And let's see another one. On the sell side, we see an area where price action has traded back into that area and creates a bearish order block on the monthly time frame. This simply means change of order flow. All right, so we see another bearish order block right here. Price action creates the buy candle that was traded through by this sell candle. Do you see the momentum of the sell candle? That is a bearish order block. Price traded into that bearish order block. You see that after we traded into that bullish order block here, price action traded into that bearish order block, and what do we see? We see price create another bearish order block. You see the two candles here, the two candles here that were traded through by sell candle, and it has a fair value gap attached to it. It makes this order block a high probability order block. Okay, price action traded into this bearish order block, created another expansion lower. Again, this is another bearish order block. You see that this candle, the candle body that was engulfed, price action traded back into it, created another expansion lower. Again, price created another bearish order block. The last buy candle here that was traded through by this sell candle, thereby engulfing the buy candle, that is a bearish order block. We traded into it, created an expansion lower. So you're going to see price action create this signature in price action again and again and again and again and again and again. This is just one way to identify order blocks. So I would like you to go to the chart, do in hindsight study, see how order blocks are very powerful and how to use these order blocks on the higher time frame and as well on the lower time frames for finding entry signatures. Subsequently, I'm going to show you how to use the order blocks to take entries while you're trading. Even this week, we see the order block provide support for the Euro USD and resistance for the dollar index on the 4-hour time frame. If you take a look at the 4-hour time frame, this week's price action, look at what provided support for the buy on the Euro USD. It was a bullish order block. Do you see the last sell candle there that was traded through by a buy candle? That is a bullish order block. Price traded into that bullish order block, and that engineered all the buy on the Euro USD and the sell on the dollar index. My friends, if you learned something in this video, make sure you like the video, subscribe to this channel, and turn up your notification bell so you stay updated every time I post a video. Until next time, I wish you good luck, good trading, stay safe.